All right. Good morning, everybody. Happy Ticker Thursdays. Let's get started here. Guys hear me okay? Ouch. Disney's making a $1 billion investment in OpenAI. Sure, of course they are. Of course they are. Okay. Yes, audio and visual are good. Perfect. All right. Well, welcome. It's great to have you guys here. Again, happy Thursday. I have a special guest with us today. She's just here from school for a minute. She's over there, very busy, watching Shrek. Belinda, want to say hi? Wave. She is multitasking, watching Shrek and playing Roblox at the same time. So that's what's going on over here. This is her first cameo appearance on YouTube. Anyway, it's good to have you guys here. Let's get started. There's actually a lot to talk about here today, so I would say let's get started. Where to start? Okay, so, I mean, yesterday was an interesting day as far as sort of risk assets. As far as risk assets are concerned. So what's really interesting yesterday, and we'll go through a bunch of sectors and things that I think will be interesting for everybody to be aware of, but just notice that when you look at the bond market yesterday, so the U.S. bond market, the rates, right? So you can see we had that rally higher in yield into the report yesterday, and then we basically gave most of that back between yesterday and today. This is also why I made a pretty big deal yesterday about saying that it's interesting to see those yields rally, but not something I would have taken a position in, because there's so many machines and things that are constantly, these are macro trades that are better for multi-quarter kind of purposes. So if anyone that got excited about yields going higher into the Fed, they got absolutely completely destroyed on that move back down in yields. So I'm always careful about those kind of things. So hopefully most of you didn't make some sort of a bullish bet on bond yields yesterday into the Fed. That's typically one of those macro things we want to macro mistakes we want to avoid. There you go. Now, what did react yesterday? And this is important, right? This is largely a function to rates going down yesterday. This is why it's so important. I was talking about watching the bond market. I think it's so important to watch. So let's go over to the equity side. And again, notice that yields went down yesterday. The question, of course, is what to do now, right? Everyone's going to search. What about now? What about now? I'll get to it. Here's the thing. So yesterday, what ended up happening, if you look at this part here, this equity sectors thing, I'll move it over a little bit further so it's a bit better. What's interesting about yesterday's move is that with the move down back in yields, you ended up having industrial stocks, materials and consumer discretionary, and healthcare and financials actually lead, and energy. You'll notice that technology underperformed. There's actually a reason for that. And it's not because the rates went down, but because the Fed basically started saying they're essentially doing QE, right? They're going to start buying 40 billion of, I think, short-end notes. So that's, I don't know if they actually gave us let me see if I wrote it down. Let's see what I wrote down in my notes. I don't know if they actually give us the maturities, but let me have a quick look. They said, I wrote it down here. Come on, where is it? Oh, here. 40 billion of T-bills. Okay, so that's basically, 90 days kind of thing. What I want to point out, though, is as a result of some of these moves yesterday, which which is basically, again, quantitative easing means more stimulus, right? And we kind of knew this, but more stimulus, basically, the more stimulus you get, the more the yield curve is going to steepen, right? Because people are going to get concerned about the U.S. debt problem, as they should, right? But you also get machines noticing that, so they buy pretty much everything. And so what does that mean? So yesterday we saw moves and real breakouts in other parts of the market, and this is now becoming very, very telling. So before I look at those individual sectors, notice that the equally weighted S&P 500, so you look at the RSP, it actually broke out yesterday out of a range that it's been in for a little more than 2 months now, right? Almost 2.5. Jeez, it's already 11th of December, so almost 2.5 months. So that's interesting because we continue to see this rotation in the market that hasn't been able to propel the equally weighted S&P higher, because it's been, the batons continue to be passed to other parts of the market. But now we're starting to see real meaningful lifting broadly. Right now, whether this lasts or not, we'll see, but we do have both bullish momentum and trend in a lot of these things. So if you look at, for example, yesterday, one thing that really did well is regional banks, right? And this is why we continue to say that we want to be long the equally weighted S&P 500 more so than the S&P 500 itself. Because at some point, and it's already been happening for 18 months now, by the way, it's nothing new, but at some point, the S&P will simply not go higher anymore for maybe a decade, right? But the equally weighted might have a much better chance of doing so, because of this, largely because of the heavy focus on tech. And so if you look at regional banks yesterday, they actually broke out as well. So we have both momentum bullish and trend bullish on regional banks. What else? Well, what about industrial stocks, right? This is the industrial sector. It's not a clean breakout yet, but it's pretty darn close. In fact, we did have a breakout on a daily basis, at least so far, industrial stocks. A lot of individual names there that are really interesting. And really, there's so many things. You look at something like Phillips 66. This is an energy stock. And for those of you guys that are members of our Market Rover or ETF Salad Pro, you know how bullish, or Heat Seeker, you know how bullish we are on energy. So you look at something like Phillips 66, which has already been outperforming, and yesterday up 2.8%, breaking higher, right? So that's a pretty important move. Let's have a look at NVIDIA just for shits and giggles. And again, as I mentioned yesterday, it's not like NVIDIA is doing horribly. It's just it's not doing anything, right? So the sooner that we can get out of that NVIDIA funk, that AI all day, every day, and that can really, really hurt not only a trading account, but very much so an investment account. Because that baton's been passed on to many other parts of the market, including, you guys know, we've been talking about it now for a year and a half. And this year especially, we're seeing massive, massive outperformance in basically many things that are not AI, right? And so that's just so important to understand and respect. So this is the year-to-date performance of, again, I keep bringing this up every morning, of, gold miners, gold, silver, all those hard assets, platinum, uranium. So those are all the kind of things that continue to do well and beat a lot of those AI bubble stocks, right? Last but not least, and before we get to Ticker Thursdays, I do want to bring this up, and this is really important. So when we look at, for example, the dollar index, right, which is today once again down. So the dollar rallied into basically mid-November, and ever since then it's been going down. The reason why the dollar is lower today is because obviously lower rates, right? But also because of, again, that basically stimulus that the U.S. is doing, buying, and ultimately issuing more debt. So it's again, what it is monetary debasement. It's the debasement of currency, which means the purchasing power of the dollar and most fiat currencies are getting completely purchasing power gets completely destroyed. Now, what's the beneficiary of this? And I'm going to leave it with this chart. I think this is a beautiful chart, and I do hope everyone understands this chart when I start drawing it here. So you can see the dollar down. It's actually not the absolute level of the dollar. It's the monetary debasement that's the problem. So the purchasing power of the dollar, like how much does a dollar buy? But I think this will suffice for today. So if I were to add, for example, silver, okay, and I'm going to add gold as well. sorry, XAU. These are the spot prices in case you don't know what these prices are, right? So you can see the dollar, which is the candlestick chart, right, has essentially, after topping out in 22, has been going nothing but down over that period, and gold and silver are up in a straight line, right? So this is what we're seeing. This is also why a lot of people like the idea of a diversification of this theme into something like Bitcoin, in smallish amounts. That's not a recommendation. That's just what I'm telling you what some people are doing. So anyway, so having said all that, let's see if there's any questions. Stocks, Ticker Thursdays here today, so I'm happy to spend a few minutes going through some individual stocks if you guys have any that you would like to look at. And of course, if there's any questions on everything we just talked about, right? Hopefully this has been helpful. I thought a lot about what I would focus on today in today's session based on yesterday's Fed meeting, because everyone was kind of focusing on that. Let me just quickly go through one thing here as well. Christian was kind enough to type in the link again to our sector and group rotation educational session this week. So the sector and group rotation is a strategy, right? And it's basically called trend. It's through the lens of trend following. So if you don't know what that is, or if you would like to learn how that works, right, rotating from one sector to the next when there's strength, we talked about today. I gave you 3 of them. I gave you regional banks, industrials, energy stocks, right, and many other things, by the way. So these are the kind of things where money is rotating into. But of course, we need to find out how that works and how do we find these opportunities. So that's really what this session's all about. So you can sign up for that. It's totally free. We're doing it tomorrow on Friday. So make sure you join us there. Okay. Only one question so far. Only one ticker. It's got to be more than one ticker, I would imagine, that people are asking for. So if you guys want to maybe recalibrate and see if you have any questions, we'd love to hear. But the question is really natural gas, UNG. I'm going to bring up the UNG, which is the futures contract. So UNG, natural gas. Like, I don't see any reason why natural gas wouldn't go a lot higher. The question is, what's the time frame, right? Natural gas is a very, very volatile asset. So I would be very careful with it. I would size it appropriately, and I would make sure you understand that it's either you have either has a thematic call, like I have a macro call. I think we need a lot of natural gas in order to get through a lot of the energy build out and everything we have. But natural gas UNG, I don't see anything a whole lot destructive here right now. It is bearish momentum in the short term, but the trend is constructively bullish. So the best way to show you that, and I'm going to bring up UNG so you can see this yourself, right? This is why it's so important to differentiate between momentum and trend. Actually, it's even still bullish momentum. So because it had such a big run, right? So here's how you measure this. This is for whoever asked the question. So UNG is natural gas, right? This is the ETF. You can see it actually still is bullish momentum, right? But this is a volatile asset, guys. If you're dabbling in natural gas, you better understand volatility. And this is important. So it's bullish momentum, right? This is the short, and it's not yet bearish momentum. I actually thought it was, but it's not. And if you look at it from a trend following perspective, UNG, this is more the actual trend, right? So the multi-quarter thing, it really hasn't even gotten to a bullish trend. It's still actually in a bearish trend. It's not even, forget neutral. So natural gas is not yet in an actual bullish trend, multi-month, multi-quarter, right? It's bullish momentum. That's all it is right now. So hopefully that helps address some of the question. Next question is, Mike says he owns WRBY. WRBY. Okay, let's have a look at what that is. WRBY. Okay. Doing it up here. Okay. All right. Well, I mean, so the question is the time frame, right? So WRBY, I mean, it just rallied 30% yesterday, 27 point something, right? I mean, personally, I would probably be a little bit weary that it's been a big move, but you know, this is not something I would be short. I think this is a constructive move. It's likely overbought in the short term, but you know, this is not This is not something I would hate owning. Let's put it that way. It becomes more clear when you zoom out, right? So you can look at, for example, at the weekly time frame, and you can see how constructive yesterday's move was. So well done if you own that stock, Mike. David wants to look at ODFL. ODFL. Old Dominion Freight. Okay, so let's start with the same procedure we did before. So ODFL is bullish momentum, right? So this is for David. You can see how it became a buy signal from a short-term momentum perspective, right? So momentum is bullish. We've reached the free profit target. The question is now, what's the trend? So let's go look at ODFL. Now ODFL, the trend is the multi-month, multi-quarter thing, really more. Again, no bullish trend yet. There's momentum, but no trend, which means, yes, there's a short-term trade, but there's no long-term high conviction stuff yet. Does that make sense? Then IWM is small caps. Okay, let's do the same thing. Let's go through momentum and then trend. Okay, again, momentum is shorter term. It comes and it goes. Momentum doesn't last. It comes and it goes. So short term, we had a bullish momentum signal. Okay, you can see we got that momentum signal on the 28th of November. We have a next profit target in IWM at 263, 267. Oh, I'm on the wrong camera. It's always interesting how the camera just likes to switch. There you go. That's the camera. So IWM, bullish momentum for sure. As you can see, again, our profit target is 263, 264. The question is, what's the trend? IWM, again, small cap stocks. The trend, green background color, means bullish trend. Again, that's your multi-quarter, multi-month, at least, more like multi-quarter time frame, okay? Yeah, you can go to the kitchen. Sorry, my daughter's here at the office this morning. Let's see here. Let's look at SoFi. That's SOFI. Okay, so we'll start with momentum. Is this helpful, folks? Yes? No? So SoFi Technologies. Okay, now this stock is a bit choppy, and you can see we had bullish momentum, and now we have bearish momentum. So it's what we call in a chop zone. Let's look at it from a trend following perspective, so the longer term, right? So chop zones is typically where I don't trade. So in the and this makes sense, right? So look at this. So the long-term trend is still bullish. Can you guys see that? The long-term trend, that's the green background color, that means bullish, but we're in a chop zone. So there's really no momentum here short-term, right? It's choppy, so we typically don't trade in chop zones. So that's that. Okay. Next, then let's look at Dollar General, okay? So Dollar General, I know we had a nice momentum buy signal on the 25th of November that reached the free profit target. So momentum remains bullish. What about the trend? Okay, again, the trend is the multi-quarter plus time frame. Yep, still bullish, trend as well. So this is one that's both trend and momentum bullish. Okay, what's my profit target for silver? Let's have a look. Well, first of all, let's understand where silver is right now. Okay, so silver is long-term bullish trend, which means trend continues, right? So I want to remain long silver, particularly with the dollar debasement and all that stuff taking place. The question is, what's the momentum? Okay, the momentum is, as you wouldn't be shocked, it's still bullish momentum. Now the question is, what's the profit target? I have no idea. Unlike people on TV and people in bubble pretend world, believe me, people don't actually use profit targets. That's not what like hedge funds do. Like people that actually are in the business. It's silly. What you can have is an initial profit target, so we take some off. We have to respect trend and momentum. So silver, I will remain long silver, signal-wise, as long as that green background color is green. If it turns into the black background color, or ultimately even red, I will get out from a trending perspective, multi-quarter. From a short-term perspective, as long as silver remains above this purple line, it has bullish momentum. And I want to respect that bullish momentum. Make sense? Andrea, that's a good question on silver, but profit targets is Wall Street stuff. Wall Street has to sell you stuff. On the buy side, like people that actually invest, that have to invest money, Profit targets are kind of silly. It's all about trend and momentum is really, and of course, the broader structure. Okay. All right, folks, listen, we've gone 25 almost minutes. So hopefully this has been helpful. We went a bit longer today. Was this good? Yes? No? I unfortunately have to jump on my next call here, but hope it was helpful. By the way, I should also mention, I didn't say this, but I forgot to mention before, for those of you joining us tomorrow in our weekly educational session, in this case, we're teaching you about sector and rotation and trend following. You also, when you sign up for that webinar, it's free. You're also going to get our new top 3 ideas for 2026. It's an ebook, which I just finished it, I don't know, a few days ago. So if you're interested in that, you can sign up for the webinar and get that for free. It's a free webinar. It's just our weekly educational session. We like to do one a week for our clients. So, all right, folks, thanks so much. Have a great day. Great weekend. Please give us a thumbs up like on all the videos, and especially this one here right now as well. Sign up to the channel. It's free. That way you get updated in real time. That way we can continue to do the show. We are actually thinking of maybe shutting this show down if we don't get more people watching, just fair warning. So please make sure you spread the word. Otherwise, we may not be doing this a whole lot longer. This is not a threat in any way. Obviously, I'm just telling you, we do need more engagement. We need more people watching. Otherwise, it's not really worth our time to continue to do this show. So please spread the word. Thanks so much. Have a great weekend, and we'll see you guys in the next session on Monday. Take care.